Good afternoon and welcome to another of our Webinar Wednesdays, here hosted by CSU Bakersfield Small Business Development Center. Good afternoon, I'm Kelly Bearden. I will be your moderator, give you a little information on some of the pandemic programs going on, and then I'll be around to introduce our special guest today, Bo Blodgett from the RCAC, the Rural Community Assistance Corporation. So we're moving along with webinar number 81 on pandemic relief and beyond pandemic relief as we look forward to a recovery with our small businesses across our three-county region. And as you know, we're part of America's SBDCs, a program that's in all 50 states. It is in also 6 federal US territories, providing technical assistance in the frame of business consulting and advising and mentoring, along with training programs and other special projects that help the community, small business communities in their areas. Well, we're up to September 29th as we prepare to leave the third quarter, the end of the third quarter of 2021. September 29, 2021, and it's still kind of about the EIDL today as we had significant changes a few weeks past that we have detailed now, but we're going to still kind of see where it's gone since then and what's going on with EIDL, give you a little of the tips that we're running across, and continue to talk a little bit about EIDL. We'll also talk a little bit about a key vote coming up tomorrow that will affect the employee retention credit. So the ERC, the Employee Retention Credit, sometimes called the Employee Retention Tax Credit, is scheduled to expire at the end of the year. However, if the infrastructure bill passes the House, which is going to be interesting to see what happens there, then what it would do is it would end the Employee Retention Tax Credit based on September 30th or tomorrow. So we'll be watching that, and then when all this shakes loose, we'll be back in 3 or 4 weeks talking in depth about the Employee Retention Tax Credit and where it has gone and when it's ending and all the other great details. We also know the California Relief Grant, the grant program that, depending on the size of your small business, up to $2.5 million in sales. You can get between $5,000 and $25,000. The California Relief Grant is closing on September 30th tomorrow. So it is a definite last call to get out there. And if you have any questions, we're finding relief also with people going through Lendistry, calling their call center and actually working with them. They are the platform where you did apply or applied. If you already applied and received the funding, then you have received it. But for those of you that have not, tomorrow is the last day to actually apply. So we'll have a few tips for you today on what's going on with EIDL and the California Relief Grant, and also, some fraud alert that's kind of we're seeing. And we're seeing a couple of different cases of fraud alert that's involving phishing scams, usually based on the SBA with the new EIDL changes and others. The key to remember there is that, number one, your information, most of your vital information that would be stolen from you and used in a phishing scheme is going to be available for you to enter through the portal. Also, you can call SBA at their disaster loan number, their toll-free number, and ask them if the email is from them. If it looks, they're very legitimate looking these days. So do be careful. It could come from an SBA site says sba.go instead of .gov. You got to have that sba.gov. So be on the alert. You're going to be potentially coming across some of this stuff, but we don't want to over alarm you, because there will be correspondence and there will be interaction from SBA coming. It's just most of it's going to be in the portal. If you get it in the form of an email, you can always call and verify that email to be accurate before releasing your information. Today, the Bakersfield City Loan to Grant program is continuing. Program that is working with Community Development Block Grant Funds, CDBG. So there's a process involved in that, and you can contact Access Plus Capital to get more information on that. And we're going to take your questions, and as usual, we will have a poll. So let's see how my poll's working today. And again, it kind of wants me to stop my share, so we'll do that. And we'll launch the first poll question. And it's going to be on pricing. We haven't really talked about your business and your pricing strategies and what you've been doing in an era where we have big changes. So as you're starting to see, as far as your pricing that you have, it's either remained at pandemic levels, has increased slightly 10% or less, has increased moderately between 10 and 20%, has increased substantially over 20%, or your prices are actually decreased in the last 18 months. So you get one crack at this thing, one answer. We're wanting to know just an idea roughly on what's going on pricing in your particular business. We're seeing it in a lot of businesses out there, seeing some pricing that has been changing quite a bit. We do have 40% of you that have actually participated. Get a few more of you in there. Then we're going to end the poll and share the results with you. And 50%, we got you. So here, let's end this poll and let's share the result. If you're in, you are in, and it is ended right now with 53% of you in, sharing the results that show that 29% of you have increased slightly, 10% or less, and 29% of you have increased substantially over 20%. So both on the increases there, 24% of you have held the prices steady and you have remained at pre-pandemic levels. And also moderately 18% of you have increased. Actually, nobody has decreased their prices during the pandemic, and that is probably to be understood. So thank you. It's good to note that that we had two winners here, under 10% and over 20%. So throw an average there, you might all end up in that moderate category. So maybe everybody's 10 to 20, so to speak, at least as an aggregate. Okay, we're going to stop sharing that poll, and we're going to offer you now up the second poll question. And the second poll question is going to actually be a little bit of a variant from that, a little bit of an add-on. And so we share this second question with you. It's given me a little bit of grief here, trying to get the second question up. So, and the second question, of course, is incredibly good, so we can't have a problem with that. Okay, so not going to get the second question today. Apologies, it was going to be on the reason for the increase. I'll tell you right now, maybe we'll save it for next week. It was going to be on the reason is if your costs were going up, if your product was in or service in short supply, etc. But we'll deal with that next week and get back to this. And who knows, maybe we'll ask it later in the question when the poll wants to cooperate a little bit more. Okay, so as you know, we have sponsors that make it available for us to host Webinar Wednesday every Wednesday. So really want to thank our sponsors, the County of Kern, CSUB School of Business and Public Administration, Mid-State Development Corporation, SBA, GoBiz, the Governor's Office of Business and Economic Development, and all of you out there today for joining us today. Okay, also, our special guest is going to be talking about a little program that are tools for growing your rural businesses. That is going to be tonight, and you see if you feel compelled to learn more information about RCAC and the people they work with and their partners, etc. So you can go to this website here, and I think Maureen will drop that into the chat. As Maureen will drop in a lot of other things into the chat as we get going today. So thanks, Maureen, for doing that. If you have questions and answers, please go to the Q&A box, and we'll touch the Q&A box as we at the conclusion today. So what are some of the action and some of the key stimulus programs that are still going? Well, we know our EIDL loan, our COVID-19 EIDL loan is still open. It is open and you can apply. You can actually request reconsideration, and you can also increase the size of your existing amount, or you can at least reconsider or request an increase. Again, that'll be done on a basis of underwriting your particular loan, the variety of factors that go into that. We also know that the employee retention credit is still open. Talked a little bit about that in the big vote coming up tomorrow on the infrastructure plan. That is the $1 billion infrastructure plan that has already passed the Senate. So if it passes the House, you can count on the employee retention credit going away on September 30th. If it does not pass the House, it is going to most likely at least possibly, I guess is a better answer, stick around to the end of the year, which is where it is right now. Also, we haven't talked much in the last few weeks about the targeted advance and the supplemental advance portions of EIDL, of your economic injury disaster loan. So those are still open and available, and you can go through the same process that we talk about with the COVID EIDL. COVID EIDL goes to $10 million if you have actually 5 companies that can hit that $2 million max. Now, you know, your targeted is only going to go to a maximum of 10,000, and supplemental an additional 5,000, but it goes through a same process if you've been turned down. We know our California Relief Grants program's open. Rounds 7 through 9 are open until actually tomorrow. So there are, if you're waitlisted, don't reapply. Same thing with EIDL. If you've applied once, do not reapply. And then also we have PPP forgiveness open. And, you know, we'll take a look and jump back into PPP forgiveness when we do kind of our potpourri show, or throw everything in the bag show. And coming up in 2 weeks, we'll have a webinar that does that. So forgiveness is open, and actually that's quite of a downward trend from where we were just a few weeks ago when we would have all these programs up here. Some of them had closed, such as your PPP and your restaurant revitalization fund, but there are still aspects of this that you need to manage, and managing your business throughout the pandemic and now on to the recovery. So kind of where we have been, we've been talking quite a bit still about EIDL because we think that there is a great opportunity. And that opportunity is still there for you to increase your EIDL to a maximum of $2 million. As of Sunday, or excuse me, as of last Thursday, September 23rd, the IRS had, the SBA had approved more than about $268 billion in EIDLs. Now, the amount we had been watching had been increasing as SBA worked through their workload. We saw them work through their particular workload, and they were throwing out $5 and $6, $7, up to $8 billion a week. Over the last several weeks, we've still seen this slow on new EIDLs and new EIDL advances, new EIDL reconsiderations for larger fund amount. But it has only been going up about $2 billion. So we do know that, we assume anyway, that Congress has appropriated about $500 billion for EIDL, and we're at $268, which if you take away the money that would go from EIDL with the infrastructure bill passing, about $30 billion, that would leave approximately 100 businesses that could get 2 million EIDL in loans and wipe out that 200 billion that's left. So as we had mentioned, the EIDL funds, about 30 billion of that will transfer to the infrastructure bill, and the House vote is again on that tomorrow. So both EIDL and ERC are affected by that vote tomorrow, with part of the funding for the $1 trillion would come from, some of it from EIDL and some of it from ending the employee retention credit a little bit early, a quarter early. So some of the things that we've been touting as far as EIDL changes, in addition to it going up to $2 million, is that your EIDLs are all now considered over a 24-month period, regardless of when you got your EIDL loan. Even if you were one of the first ones that got it 18 months ago and you put the money into your bank 18 months ago, you can still use that for another 6 months, for that full 24-month period, and allocate expenses, eligible expenses that can work for that particular program. We know that the EIDL is deferred. They're deferred into next year, but recall the interest still accrues on that. And whereas EIDLs are very inexpensive to take out, usually about $100 if there is a UCC1 filing, $100 it costs to take out the EIDL. There's no points, there's no loan origination fee. It's just that set $100 that comes out of that particular expense. But the interest rate still does accrue. The targeted EIDL and supplemental also are starting to see more action because we're starting to see some of the reconsiderations go through. And I know that there was a long period of time where people struggled with getting information. And the one big change that's coming both with targeted supplemental and COVID-19 EIDL is that much of this is all going to be done in the portal. It's all going to be done in your particular account. So please recall that. So, a little history, the EIDL was at 500,000. It went down to 150. It went back up to 500,000. And then officially on October 8th, they will start considering the $2 million maximum increases. There is a strategy that SBA has kind of recommended. Say if you want to go from 150 to the $2 million or somewhere in between, maybe it's 600 or 800,000 would be a maximum great EIDL for you. Right now, if you go through the process and limit it to 500,000, and I'm taking into consideration that is probably where you would grab the 150 if you're at 150 now, and go up 350,000 before October the 8th, then that would be considered now. And then any increase from 500,000 up to the 2 million would be done after October 8th. But Main Street businesses, smaller businesses that still need smaller EIDL, still have that window. You still have that window till October 8th in order to apply before the big guns come gunning for this money. And again, the program ends the end of the year or when funds are exhausted. Then you just hate it when your funds start huffing and puffing and they go, I got to go to the gym, I'm exhausted. Well, that's what's happening with EIDL. The funds are going to be exhausted. So we knew it came back up to 2 million, talked a little bit about this. There is a max of $10 million. So if I think the example we've been giving, if you have a business that has maybe 5 locations and all of them have suffered larger losses to where you can go to the $2 million. That's just one example how it can get to 10 million, but it can get to 10 million. And again, it's a 30-year maturity with very low interest rates. So again, the program is underwritten and it goes off of your gross profit. So it's an algorithm that works off your gross profit. And again, gross profit is simply defined as your sales or total revenue minus your cost of sales equals your gross profit. That is before all of your operating expenses that lead you to net profit. So it goes off that amount that's higher. Oftentimes you might need to show that you need 2020 numbers. There's a lot of different cases and a lot of different examples in here when people got their original EIDL. But everything has been kind of mainstream now to protect against fraud and waste and other things. So they're doing a lot of due diligence that hadn't been done earlier. And plus there was a big rush to get these funds out. EIDL then was emergency funds. EIDL now are recovery funds. That's the big difference, is they're moving to recovery type funds. Also, the eligible expenses have changed. And the big one is borrowers now may able to use commercial debt, including credit cards, but not federal government backed debt, maybe state or local, to actually pay off those balances. So borrowers, again, can use idle proceeds to pay off commercial debts, including credit cards, and any state or local government-backed debt, but not your federal SBA loans and things like that. So as you recall, previously we used idle just for working capital to pay our suppliers, our employees, also notes payable and other short-term nets, and some of our working capital needs, such as rents and utilities. But now the big game changer is the opportunity for you to take out higher priced commercial debt and to replace it with debt at 3.75%, and it's not going to last long. So a couple of ways that you can request additional idle funds. You can go to SBA and actually email them at COVID increase requests. It's probably better if you go into your portal to where you can apply directly inside your SBA loan portal. Starting to hear cases, heard one today actually of one where there maybe wasn't a reconsideration. And the problem is their case or actual idle portal was closed. And I hadn't heard that before. So now trying to work through that process to get at least a reconsideration on that. But you can request additional funds right inside the portal, and it is probably best to do that if you can. Some other requests that you might want is you might want to request a previous decline. So if you were turned down, what were the facts and circumstances around that decline? Have they changed? And this can go all the way back till last March. You could have been declined last March. You can still go through the reconsideration process. Do not fill out another application. Multiple EINs of the same EIN will just create more headaches and problems. So if you've had a decline, if you've had other reasons why you want to reconsider that, go through the reconsideration process. And we recall when we were talking earlier, you completed a 4506T, which allowed the IRS to receive tax information or give tax information to the SBA to validate the information you submitted matched up. So, and then you go through that, and you know, that was kind of a process. So you went through that validation process with the 4506. Sometimes, you know, that information didn't get to the SBA and would result in a decline. It is possible, and we have seen this actually as a fix for unverified information, and the unverified information was the tax return, was to go to your local IRS office and to get a stamped copy of your tax return, whereas you could, in the office, after getting an appointment, get that actually verified at your local office of the IRS. Okay, some other issues are loans under 25,000 are not secured. Over, you tend to see a UCC filing, which is what we call a blanket filing of your assets that are not secured. Remember, you got to be able to prove that this COVID-19 impacted your business and that economic injury came from that particular area. And then you really need to manage it to have those receipts and invoices and canceled checks, and to have that add up to your idle amount and to verify and be able to show upon an audit later on that, you know, your funds are actually used within the eligibility intent of the program. You might have to show proof of hazard insurance. Also, we're hearing that if you're alarmed and you've had a corporation, but you haven't had it very long, there is a corporate resolution that's going to be needed if you're a corporation, and that is going to be based on the corporation's authenticity of it being eligible to borrow. So it's not just one shareholder, or it's not the principal shareholder saying we're getting this loan. It's the entity itself, the corporation, that is doing a resolution that is saying, yes, we would like to borrow. So again, rounds 7 through 9 of the California Relief Grant, and that is tomorrow is when that ends. Maybe a last chance to where you can catch a Spanish language version of that presented by the California Hispanic Chamber of Commerce. And then also tomorrow there's a Mandarin version. If not, there are things even on our YouTube channel. We have one going back several months, 9 months, that is still pretty darn fresh, you know, considering. Maybe the dates and times, but that's it. We're going to get into the ERC later on. There's our wonderful retention tax credit that we had. We're also trying to bring out any small business funding questions that you have and programs. Access Plus Capital, a CDFI that does work here in the San Joaquin Valley, a little bit on maybe the coast and in the central and eastern Sierra. They have a nano program from $5,000 to $20,000 that will use actually lessen credit scores, get your cash in hand, and have typically a fairly low interest rate. So if you know anybody that needs that, have them contact Access Plus Capital. We'll jump into forgiveness in a couple of weeks just to kind of go through what has changed and what is updated. So again, if you received a PPP loan, and we're talking about PPP forgiveness is a forgivable loan. Your EIDL, your economic injury disaster loan from SBA is not. It is a paid back loan. But if you got a PPP loan, you still have to go through that forgiveness or you will be paying it back. So again, go through that particular process. Here's the timelines on that. If you got one from last year and it's not been forgiven yet, particularly if it was in the first few months of the pandemic, April, May, June, you're going to want to get on that right away. And the first step is always going to be with your particular PPP lender. There's a couple of different processes that PPP lenders use. So look at that and go through that particular process, and then actually use the platform and use the guidance that you have from your PPP lender. And again, this has all been about 81 weeks of managing pandemic relief and managing your business during the pandemic. And there's a lot of unique situations that come up. They still come up. There is a fix. And when you run into EIDL programs and other programs with other agencies, we're really finding that those toll-free numbers are really offering a lot of assistance. So we've seen that in EIDL, but it can be done in other programs as well. So keep that in mind as you manage these and know your timelines, understand your program funds, and kind of work with the programs to maximize your benefit. Because if you use the expenditures along lines for different programs, there's a way to maximize that potential business and give you a better opportunity to come out in a good situation at the end of this mess. Okay, enough on these particular programs and everything. We do have a special guest today, and I'm glad he's joining us. It's Bo Blodgett, and he's with RCAC. And RCAC, I mentioned earlier, was an acronym for Rural Communities Assistance Corporation, which covers a large part of the national scene, but also the Western United States. You can see actually Bo's bio there. Let me just tell you a little bit about how the SBDC has worked with RCAC over the years. Being a CDFI type lender, I will let Bo explain all that to you. We have worked with them on small business programs in our rural areas. Previously, we had a gentleman, Michael Carnes, who worked out of the San Joaquin Valley here, and he attended several of our events and would present and ended up getting several loans funded in our rural communities. We did particularly well at our Eastern Sierra Capital Summit a couple of times and started seeing Inyo and Mono type businesses that were being funded. Also, we saw in Eastern Kern County, RCAC was active. So Bo is the person to know. Hey, I like that. Bo is the person to know. I'll repeat it, I liked it so much. And Bo's going to join us now and tell us all about RCAC and how it can help your business or even your personal situation. Bo, it's great to have you on board today. Thanks for joining us. Take it away.
Thank you, Kelly. I will steal your screen. And okay. can everybody see the rural resilience screen, or did I share the wrong screen? Hold on a minute.
We can see it.
Great.
Good.
All right, awesome. So I'm with RCAC. I'm a rural development specialist. And I'm here to tell you a little bit about RCAC. So we work with rural communities across the American West. And we're really looking at, our mission is to create vibrant and healthy, enduring rural communities. And so we do this through a few ways. We have a CDFI, which is a community development finance institution. So we have a lending wing of RCAC, and our lending wing, they provide loans through kind of all of the areas we work in. So I'll go over those a little bit more, but CDFIs are really great for accessing capital because they are mission-based, right? We are a mission-based lender. So our interest isn't necessarily just that profit, it's really that social element as well. So we're a lot of times the capital, the loans that we provide will have a lot less barriers to entry than some of your traditional profit motivated products. But I'll go over a little bit later some of our other lending sources and loans that you all might find relevant. So we also have we also work in capacity building in our small communities and rural areas. And one of those ways is with wastewater and drinking water development. So just to let you know that we have those services available. I am part of the economic and community development department. We call ourselves Building Rural Economies. And what we do is we kind of have three programs. The first one is we go into small communities, we help them identify economic development goals and then provide assistance for them to realize those goals. The second program we have is called Start, Grow, Revive Your Business. We go into these small communities and help them establish and grow entrepreneurial ecosystems. And the third one is small business coaching, and that's more of a direct service one-on-one with a small business, helping them identify goals, improve their marketing. It's really providing that one-on-one coaching assistance. A lot of times we focus with this area on helping businesses connect with financing in particular. We also work in housing, multifamily affordable housing, single family affordable housing, and we have a pretty strong advocacy. We're big advocates for rural communities in Washington, and we have that program as well. So that's a little bit about our CAC. We are regional, right? So this is our map of where we work. So we're in the 13 Western United States, 13 Western states, Alaska, Hawaii. The eastern half is, kind of Montana, Wyoming, Colorado, New Mexico. Our headquarters are in Sacramento, so most of our work is on the West Coast. And then, we also have some, kind of outliers in these Western territories, or I guess that would be Far Eastern territories, Guam, Marshall Islands, and I think this one is Pogo. So a little bit about where we work. Rural communities, we define rural as communities 50,000 people or less. So most of our programs are only available to those communities. So I want to talk to you specifically today about a few of our loan financing opportunities that we have available. And the first one is the Re-Emerging Loan Fund, or we call it RELIEF. And so the RELIEF loan is really meant to help businesses re-emerge from COVID, right? Re-emerge from the financial effects of COVID. So, the process for this is you contact one of our loan officers, and they will kind of work with you, and you need to provide a narrative and kind of talk about show proof that you've been affected by COVID. And, if you can do that, then they can work with you. The loan amount is up to $25,000. So there's no loan fee, but there is a $250 processing fee, which can be included in the loan. It's 3% simple interest. It's amortized over 5 years, so a 60-month term. No collateral required. There's no hard credit pull. Instead of the credit requirement, you are required to engage in small business coaching. So you would contact the loan officer, and then he would send you over to me, and then we'd identify some business goals. We talk about how you'd use the money, maybe do a cash flow projection. I'll write, kind of a report to the loan officer, and then they'll disperse the funds. And there's what's really nice about this funding source is it's very flexible. So payment deferrals can be implemented if needed. And then if you get into trouble, depending on need and circumstances, we do have the ability to forgive this loan. So that's pretty cool, right? It's just kind of a low consequence source of money. So you're the person in charge of Central California. I believe Mike Carnes recently retired. So Daryl English is your connection. So I might just put that in the chat real quick, his contact information. And he will, he'll actually be at our webinar tonight. So we are giving a webinar on resources specifically for Central California. And if you would like to connect with Daryl, he will be one of our panelists tonight. So I encourage you to come to this, and I will also throw this registration link in the chat as well. But yeah, I really a great source of funding. And we've had a lot of success. A lot of people have used this to buy inventory, dealing with supply chain issues with the pandemic. They've used it to kind of start new business lines. We had he was an audio visual guy. He had this business, and he was doing like $1 million in revenue for concerts. And then the pandemic hit, and he had to pivot and do more kind of visual installations. And so, we were able to kind of fund him to kind of start that project and grow that into a pretty successful business line. And so we've had a lot of success with this. If you're interested, Daryl English is the loan officer. That's where you start, or you can contact me, and we can have a conversation and see if this is something you'd be interested in. Another funding source I would like to share with you all, and it's not one that RCAC does, but we are a partner, is Kiva. So let me pull up the Kiva slides. So Kiva is, it's crowdfunding, but it's a loan, right? So it's a zero fee, zero interest loan, and it's crowdfunded from people all across the globe. So up to $15,000. Loans can be less than $1,000. So a pretty big range there. And it's a 1 to 3 year loan repayment. It's distributed through PayPal. And so the way it works is when you apply with Kiva, you have to do your own private fundraising, right? So you have to get, I guess it's 5 to 40, depending on the size of your loan, 5 to 40 lenders to contribute to your loan. And then once you reach that private threshold, they'll put it on the Kiva website, and then people from all over the world will contribute. And that fundraising amount that people can contribute as little as $25 towards your loan. What's cool about Kiva is rural LISC. So if you're a rural business in a community of 50,000 or less, rural LISC has a pot of money that they match for Kiva. So you only get your loan funded if you raise the entire amount, and rural LISC will match dollar for dollar any money that you raise for your loan through their program. And so, you raise 5,000 through your friends and family, and then the crowdfunding website, Rural LISC, will come in and match that 5,000 for the total $10,000 loan. The way you access that program is you have to work one-on-one with the Kiva trustee, and that's where RCAC comes in. So RCAC is a Kiva trustee. You contact me and say, I'm interested in Kiva. We do some small business coaching, talk about how you're going to repay the loan. If we determine it's a good fit, then I give you a link, which automatically puts you, which if you fill out the application with my link, then you are eligible for the Kiva match. And then you work with RCAC, you work with me or someone on my team to kind of fill out the application, then support you through that process, and then afterwards through our small business coaching services. And so that's a little bit about Kiva. Back to different loans that RCAC offers. We have small business loans. So if you're looking for kind of a more traditional working capital loan, or a line of credit, or a term loan, we do have those available. Generally, I think this says that interest rates and fees are determined based on each loan, and are subject to change, but generally they're somewhere between 6 and 10% for kind of our traditional business loans. Beyond the small business loan program, I'm going to show you just a few other loans that you might find interesting for your communities. We have a household water well and septic system loan program. And so that is, if you're in a rural community, and this is less for business, this is more for kind of your personal use. But if you are in a rural community and your septic system goes out, or your well system goes out, we have a loan of $15,000 at 1% interest that's amortized, that may be amortized over 20 years. So that's a really nice program if you're in a rural community. Again, not necessarily a business source, but certainly something to look at. Beyond that, we also lend for community facilities. But this is just for nonprofit organizations, public bodies, and tribes. But if your community is looking at building a healthcare facility, school facility, utility service, something like that, we do have that funding available. Affordable housing loans, we also do those. And then kind of bigger water infrastructure loans if your community is looking for financing for that. So that is a little bit about RCAC. I'm going to put up our small business coaching flyer. So this is really kind of what I do at RCAC. We work with small businesses to access capital, grants, and look at cash flow projections, business plans, marketing, that kind of thing. And you can contact me directly for any of these services, or I also encourage you to come to our webinar tonight. So and connect with Daryl English. He's our loan officer for the area. So I guess with that, does anybody have any questions? It looks like we have a few Q&A in here.
Well, I'm going to start with my questions.
Sure.
I think that's fair. Okay, first, going with the LISC match program, LISC. that you discussed with Kiva as far as being able to potentially match a crowdfunding effort, is that only within the Kiva platform, or can a client match a different crowdfunding platform, such as GoFundMe, Kickstarter, etc.?
That is only within the Kiva platform. So the LISC match dollars, it's because Kiva it's crowdfunding, but it's a loan, right? So it's different than your traditional equity crowdfunding, or I guess Kickstarter is more of kind of a retail benefit crowdfunding platform. And so yeah, this is only available for Kiva. So the one thing I maybe didn't talk about with Kiva is it is a loan. It does have to be repaid. It's crowdfunding, but you traditionally with like a Kickstarter or a GoFundMe, you raise the money and then the money is yours. And with Kickstarter, you have to deliver on a promise. GoFundMe, I think generally you just get funded. But the Kiva platform is a loan.
So the LIST acronym, what does that stand for?
I don't actually know. Let's see.
Stump a special guest. So tune in tonight and you'll have that for us, right?
Yeah, Local Initiative Support Corporation is what that stands for.
Local Initiative Support Corporation. It's a new one for me.
So we partner with them on a number of different programs periodically. And
while I continue to pick on you, Bo,
yeah,
your line of credit program, we see a need for that in rural communities. We see a need for all communities, but especially rural communities. Can you give a few more details on your line of credit program?
Sure, let me pull it up. Hold on a minute, let me pull up that flyer. So our line of credit program, here we are. Okay, so our line of credit program, so our loan fee is 1%. Loans are generally up to 150,000. And larger loans may be considered with a loan guarantee. Terms, 1 year with renewal option, maximum 5-year term. Yeah, so I mean the line of credit, it's for those ongoing expenses and seasonal fluctuation. And I would encourage you, if you're interested in the line of credit program, to come on to our webinar tonight and talk with Daryl English. He will be able to give you a lot more background into the specifics on this loan. But yeah, generally the interest rate is going to be determined by that credit score, by case basis, how strong and secure the loan officer, RCAC, perceives your business to be.
So in looking at that, and I'm not trying to ask too tough of questions, but I tend to do that at times, so I apologize in advance. But one thing in here, it says loans up to 150, and then larger loans may be considered with a loan guarantee. So do I assume that loans up to 150 are made by RCAC, and then the larger ones need a participating bank to come in and you provide them with a guarantee?
I don't think we work with any specific larger banks, but we do work with USDA, maybe EDA. We have several different loan guarantees, federal guarantees that and again, this would be a question for Daryl, our loan officer, in terms of where that loan guarantee comes from. But I don't believe that we use like a private bank or anything for any of these loan guarantees. I think it's all federal, but I could be misspeaking there.
Well, I'll be there tonight, and I'm getting loaded up on my questions for Daryl tonight.
Yeah, absolutely.
Last one, and this might be one for him too. The community facilities grant.
Mhm.
Was one of the eligible uses for that, was it business parks? Like say if a tribe wanted to do a business park, for example, is that one of the eligibilities or is it more community type facilities?
You'd have to, I would say yes, that could be eligible. Um, I think that could go under community support services. I'm not 100% on that. I mean, I think it's a case by case basis with almost any loan, right? But um, I would say that that would be absolutely something, to talk with Daryl about if you're looking for that kind of funding. Local food systems, right down here, community kitchens, food banks, food hubs, or greenhouses. To me, that food hubs, community kitchens, that speaks towards kind of what you're talking about, right? Community support services, community centers, fairgrounds. A lot of these places will house like a business center. So I would say cautiously yes on that one.
Great. Well, we probably shouldn't warn Daryl, so I can come at him with all barrels tonight.
I'll send him a few quick messages just to let him know that he's got some hardball questions coming.
Okay, well, let's hit the Q&A real quick. And the first question, I run a small catering company in Ridgecrest. Ridgecrest would be an eligible community based on population, I might add. I do not have a brick and mortar unit. I serve out of a tent. I have all of the local permits, certificates, and I found that grants are generally only for storefronts. Are you aware of any grants for this type of business?
Grants are tricky. I don't see grants a lot, and when they do come up, they're very competitive. There's a website called helloalice.com, and they list quite a few grants that pop up every once in a while. COVID, we saw a lot of grants come through, but a lot of that money's been depleted at this point. I would say, maybe you need to consider debt for financing. And if you've been around pre-COVID, there's a lot of options for you. Our relief grant would definitely be one. And if you're a startup, you could look at Kiva. Kiva is one of the few companies that will help startups.
Okay, great. Another question is, can the California Relief Grant be used by startup businesses? And the answer is no. You have to have an existing business that was impacted by COVID-19. So you needed a 2019 tax return. And that's true with most of the pandemic relief programs, but there is a recovery portion for the employer retention credit. So if you've paid wages and you've retained employees and you started your business after COVID started, which has a few different dates, but many of them are around February 15th, 2020, sometimes March 1st, 2020, et cetera. But if you started your business after that and you hired employees and maintained them, you could be able to qualify for the employee retention credit, which is a tax credit, but it can be actually offered to you retroactively, meaning, at least in my example, that what you can do is you can actually request to either take it as a tax credit against taxes later on, or actually a funding mechanism to help you with your business now. So that is what's going on with that particular program. So the answer is no to the California Relief Grant. Yes, if you had employees and you do meet the other eligibility requirements of the ERC. Okay, I'm jumping into the chat box now, and I'm seeing that Maureen has put some great resources in here to where to apply for an EIDL. Their SBA Customer Service Disaster Center. That phone number has been very helpful to a number of clients lately. Information on creating a portal for that and checklist as far as the EIDL goes. There's your California Relief Grant, your link to that. There's also, she's added, one of the issues that has come up with a client, because we do see rather unique situations to where it might only affect a couple of people. But in trying to get their California Relief Grant over the last 9 months, it was determined that their tax return was too large and it actually had to be converted down to a smaller size, a PDF. And so that is actually a link that's there, ilovepdf.com. And it's actually used by Lindustry in order to take a larger file and reduce it down that'll fit in their platform. And there's also Lindustry's customer care number, their 800 number, 888-612-4370. And remember, Lindustry is the CDFI, the platform that is administrating and actually taking the California Relief Grant on. So you can email to increase your EIDL, or you can do it within your SBA loan portal. We have, Bo, if you're looking for potential loans in the Central California, Southern California rural areas, Daryl's contact number as far as his phone number, Daryl English. If you cannot join Bo, and I'll let the cat out of the bag, and myself tonight, there's Daryl's number, and also some of the other information you might be able to find on the actual relief fund. So I don't think this event is actually closed, but you can probably still get in, but that's for the event for tonight.
Here, it's very possible our events team closed the registration earlier today. So I'm going to send the go-to training link, and that should pop you in directly. So if you want to copy that, that'll be the other way to get in there. And I'll try and reopen registration, see if we can do that on our website. But that'll get you in tonight to the webinar. It's at 6 p.m.
6 p.m. Pacific Standard Time, or daylight savings time still, actually. Okay.
So we have.
I'm going to. Go ahead.
We have one more question here. Does RCAC have any help for online learning and help for rural businesses? Yes, for online learning and help for rural small businesses. We have, it depends what you mean by online learning. But we can help you with like setting up social media, that kind of thing. But I'm sure the SBDC can help with that as well. But we do have some online resources that we can share as well. We don't have any recorded webinars or anything like that, but we do have an online system that we can connect you to that has kind of a library of resources. But you'll have to access that kind of directly through me. So contact me that way. And then if a company is on a rural location, but the project is, can the company qualify for an RCAC loan? I would say it depends. I would, reach out to Daryl English and, chat with him about that and see, what the project is and if we have funding available for it. I think a lot of times we do fund on a project base, not necessarily company base, but it would depend on the loan and what the project is.
Bo, could you let everybody know how to contact you, please?
Yeah. I will put my email in the chat. Okay. And yeah, just send me an email anytime, and I'm available.
Great. And can you verbally just read your email real quick? And you can also email me if you need to get in touch with Bo.
My email is B as in boy, Blodgett. So that's BLODGETT. So it's bblodgett@rcac.org.
Pretty simple and straightforward, the way email should be. Okay, well, thanks, Bo, and thanks for enlightening us. I took some pretty good notes to pass on to our consulting team. some of the great programs happening in rural areas that oftentimes slip by under the radar. So thanks for coming on today. Look forward to tonight and actually meeting Daryl and working with Daryl on trying to get some more loans done in the Central California region. So we'll be back next week for number 82. It'll be Michael Ballstadt, and he's going to be talking about exit strategies in a lot of different ways. It's kind of interesting. We've had people that are getting tired and frustrated with staying in business. So what are some of the options that are available rather than just walking away? So we'll hit a lot of those and some of the strategies and some of the things happening in that particular area. So Bo, thanks so much for joining us. Really appreciate it.
Thank you for having me.
Look forward to your party tonight. And we'll do it again then. So for Bo Blodgett, I'm Kelly Bearden. We'll be back next week. Everybody have a great week. Take care, everybody. Bye-bye now.